Well, there are kind of two sections that we're focusing on, if we have that much choice. The short term I talked about, but also long-term defensive income assets, and that can be logistics, as long as they're really well located. It can be student housing. You know, there are a number of different derivatives now of that. But there's also one sort of element that we've seen over the last couple of years, I guess. Investors were in the early sort of part of this century, you know, watching the fund world mature, and now it's matured to a certain extent where a lot of the misalignment that I was talking about has been driven out of it. But now they want to choose when they get their money back. They don't want to necessarily invest in a 7 to 10 year fund and then just get the money back at the end. They want, you know, in an open-ended fund vehicle, to, as long as the liquidity provisions are what they say they are, then they want to choose when they get the money back. And we've been looking at the Odyssey funds. The big open-ended funds in the States are enormous. Some of them 30 billion plus. There's no such industry of anywhere near that size in Europe, and there will be. I think in 10 years' time there will be. Global Investors, when I was there, we were working on a fund which is now $1.5 billion. There's a couple of others out there of similar size, and I know a number of others in the market are thinking about it. And I think in 10 years' time there will be the same industry, because investors around the world just want to basically place bets on markets. And if you can have a diversified pan-European core plus fund with liquidity, then it allows Japanese, Australian, Canadian, take your pick, to place a bet and then withdraw their money when they want it.
So this is really a kind of mega fund, and there's not one focused on Europe at the moment, or there's not an inability to do that, but there is in US markets. Is that what?
No. I mean, the US is way ahead on this, and that Odyssey group of funds is, as I say, a huge basket, and it's growing. I mean, the German open-ended funds, you had a sort of rethink on that a few years ago. So liquidity, it's probably not as liquid as it used to be.
Still liquid, but not as much as it used to be.
But as I say, there are 4 or 5 out there that are between 500 and $1.5 billion in size, and there's no reason, as long as they're well run and buying the right assets, that they can't go to 3 to 5, even higher than that, in billions of euros, because it allows investors from around the world to use them as a place to place bets.
Could you say something?
Yeah.
I think, I mean, yes, open-ended is the name of the game. To be flexible, to allocate, do the Markowitz kind of optimization stuff. What brought the German fund industry to a real crisis and a reshuffle and a consolidation was that some of the players were not disciplined enough. They mixed institutional, big sort of institutional chunks of money with retail money. And that, of course, caused the upheaval. So I think the separation of retail, which is a big market as well, and the institutional, I think that's going to be the important strategic thinking which we need.
I think you're right. The majority of people that are growing those funds at the moment are purely institutional money, outside Germany.
We're seeing the same sort of thing actually in terms of some of our fund work, with a emphasis partly on trying to create sort of permanent capital. Partly because, as you say, I think the fixed life fund model got slightly discredited because it takes time to raise money in a different part of the cycle when you're at the point to do deals, and then you may not exit at the right time in terms of the cycle. But I think one of the problems in creating that vehicle is actually just to aggregate the underlying portfolio. I mean, there probably are about 4 or 5 in Europe at the moment, but nowhere near as large as the US ones. I mean, you guys have got one, haven't you, in a sense? So, but I think to actually acquire that underlying portfolio is going to be potentially difficult, particularly in such a competitive market at the moment. Although there are people I saw that Aberdeen merged a number of funds. I bet they were quite a lot of UK funds. There's a trend of trying to create larger funds.